Assalamualaikum. Hello everyone, let me introduce myself. My name Nuraifa Angrani. An equity instrument is a form of ownership in an entity, usually a company, that gives residual rights to the company's assets after liabilities have been deducted. The main examples of equity instruments are common stock and preferred stock. Types of investments in equity instruments. Common stock. The owner of common stock is the actual owner of the company, has the right to participate in the GMS, General Meeting of Shareholders, can receive dividends, but not guaranteed gets the last remaining assets if the company is liquidated. Preferred stock. A combination of common stock and bonds, fixed dividends, but no voting rights, prioritized in the distribution of dividends and liquidation assets. Other equity instruments: warrant stock, options, treasury stock, shares bought back by the company. Objectives of investing in equity instruments: capital gains, profit from an increase in share price. Dividends, periodic income from company profits. Diversification, reducing portfolio risk by owning different types of stocks. Ownership and control, mainly in strategic investments. Accounting, record keeping for investments in equity. Record keeping depends on the purpose of ownership and level of ownership. A cost method used if ownership less than 20% and no significant effect recognized at cost. Dividends recognized as income. Equity method used when ownership is 20% to 50% and significant initial investment is carried at cost. Share of profits of associated companies is recognized as income. Consolidation, full consolidation, used if ownership 50%. The financial statements of the subsidiary are combined with those of the parent company. Valuation of equity instruments. Historical cost, used at initial purchase. Fair value instruments classified as FVTPL, fair value through profit or loss, or FOCI, fair value through other comprehensive income. Changes in value are recorded according to classification. Valuation of equity instruments. Historical cost, used at initial purchase. Fair value instruments classified as FVTPL, fair value through profit or loss, or FOCI, fair value through other comprehensive income. Changes in value are recorded according to classification.